Very good evening and welcome to our Nazariya. It's a monthly market outlook call. This outlook provides you an overview of the market, highlighting the key shifts and the movements along with the insights from our fund management team. So today, our speakers are Mr. Satish Ramanathan. He is a CIO of equity. He brings along with him 30 years of experience across the market cycle, including a 10 years of experience in the research. Then we have Mr. Asit. He's a senior fund manager, equity, who has almost 2 decades of experience in equity research and fund management. Also, we have Mr. Deepak Gupta. He is our head of research and senior fund manager of equity. He also comes with around 2 decades of experience in both equity research and fund management. So, so if you have any questions, please during the session you can drop them in the Q&A section, and by the end of the session we will take all the questions. So without any further ado, I will tell our speakers to start the call.
Good afternoon, and thank you, Ankita, for this introduction. Just to highlight, it is not Asit Bhandarkar, it's Bhandarkar. He's been with the JM Group for the longest, and therefore I would like to introduce him as one of the stalwarts of our fund management team. Before we go on board, I think the month of March has been a fairly volatile month post the Strait of Hormuz situation between Iran and the US. Oil prices have spiked. It has put a stress on many smaller countries. India has actually come through it pretty well as of now. So, a couple of points that I wanted to highlight, and I wanted to keep the context of this conversation is that valuations have actually normalized and come off quite considerably. The markets have declined by about 11 to 12% across the board, with small caps strangely outperforming, which means that the selling in that category seems to be done and there's some exhaustion there. And small caps have outperformed, which is why we have a balanced fund structure and it has helped us in recent times. The second thing is that the volatility is high due to the war, and if there's any resolution, we could quickly see this decline and have a positive bias on markets. So we need to be on cover that side of the risk as well, because there's an upside risk to the markets, which most people are not factoring in at this juncture. The third is the liquidity profile of the markets and economy. And the liquidity in the domestic market is improving with the RBI steadily infusing liquidity. It's now 5 trillion rupees, which is the highest in recent times post the March year-end tax filing and taxation, etc. So that's good news. And in terms of the currency has been volatile primarily because of the crude spike. India, as you are aware, does have a trade deficit, and increasing crude price impacts our trade deficit quite significantly. And we need to kind of keep that in mind as well. As regards FPI flows, the currency impact has further accelerated FPI flows, outward flows. On a year-to-date basis, we had a 21 lakh crore exodus of money, which was more than made up by domestic flows, which has been positive. So net-net, the markets actually received money from domestic savers, which is a significant positive and an insulator of extreme price erosion in the markets. Finally, I'll come to the cost of money. The cost of money has gone up marginally, but I think with better news on the war front, we should see this quickly decline. And the outcome of the war, not yet felt in the domestic economy. Inflation continues to remain benign. Energy availability and cost is not significantly different from what it was pre-war. Yes, there was a LPG shortage and some industries were impacted, but there seems to be a rapid normalization. The impact on earnings may not be very apparent in Q4. Uh, as you are aware, in the last 3 quarters, we had seen an acceleration of earnings. The OND December quarter, we had a 19% earnings growth, which was significantly higher than what we had seen in recent times. Maybe for the last quarter, that is the fourth quarter of 26, we may see some deceleration. It may be around 10 to 11%, but still reasonably strong numbers. And finally, on valuations, which I need to highlight for the first time, valuations are below 5-year average levels for most sectors, which is a key positive, and in some sectors, even below the 10-year average. So that all points to a constructive view on markets and something which we need to bear in mind when we start investing. With that, let me hand it over to Deepak and Asit to carry on with the slide deck.
Deepak, you want to take over for a bit?
Sure, sure. So if you look at the 1 year performance, India has clearly underperformed meaningfully versus the global markets. That's largely predominantly on account of the fact that India has been an anti-AI market, while the AI-led markets have done extremely well. Along with that, markets where there is meaningful amount of precious stone or precious material, such as rare earth, such as markets such as Brazil, have done exceedingly well. These numbers are in dollar denominated terms, and as we can clearly see, while mid cap have has outperformed Nifty 50 and small cap, but the returns have been extremely dismal compared to what the global markets returns have been over the last 12 months. One of the key reasons why we've underperformed, besides being an anti-AI market, has been that our currency has seen a free fall over the last 15 to 18 months. And in the last 1 year, the data is as of 7th of April 2026, our currency have declined by almost 7.5% against dollar. We've depreciated more meaningfully with European currencies, be it Great British Pound, Euro, as well as even Chinese Yuan. And while there's always a silver lining around a dark cloud, and that is in the form of our exports will become more competitive, given the fact that our currency has depreciated meaningfully versus all developed market currencies.
Yeah, I think we have to see this in context of the fact that we have done fair bit of trade deals, particularly with Europe, etc. And Europe is a big sourcer from China. Now, the way things stand, I think we are looking for attractive destination of a lot of products. The way currency has moved, that could be a big positive in future.
Yeah. So in
Deepak,
terms of commodities, as we all aware, that crude has been on a boil over the last quarter, and this data is as of 7th of April, and crude has appreciated by about 73% on a YOY basis, while precious metals have done exceedingly well. What is concerning from India's perspective is that even base metals such as aluminium, copper, zinc have appreciated significantly, which is going to put pressure on the margins in the coming quarters as we speak by. One positive thing that has happened over the last 6 months has been that all governments, except perhaps Japan, have been following a loose monetary policy. So there has been enough amount of supply which has been taking place across the globe, be it in China, Europe, and US. India had their monetary policy meet a week back, and in that meet as well, the governor has stated that they will continue to be neutral, and they will want to maintain a dovish stance on interest rates, which augurs well for the economy. वन सबसे बड़ा लीड इंडिकेटर फॉर द इकोनॉमी के लिए होता है उसका बैंक क्रेडिट ग्रोथ, कि अगर बैंकिंग सेक्टर में अगर लोन ग्रोथ हो रहा है कि नहीं हो रहा है। एंड वो क्लियरली एविडेंट है पिछले 6 महीने में, वे जो ग्रोथ जो टेपर ऑफ हो गया था 9-10% पे, हैज़ कम बैक टू अबाउट 14.5%। इनफैक्ट जो लेटेस्ट डेटा आया है पिछले 2 दिन पहले, credit growth for the March ending quarter has gone up to 16%, और deposit growth 13% हो चुका है. So this augurs very well for the economy, that the economy is in a reasonable fettle, क्योंकि credit growth pick up हो रहा है, and अगर credit growth pick up हो रहा है, this has a multiplier impact on the economy. So I think banking credit growth after a long time have crossed 15%, as can be seen from this chart. In the last 3 years, it has now crossed 15% comfortably. So this augurs pretty well for the economy. Currency depreciation, जो हमने पिछली स्लाइड में भी कहा, हैज बीन अ कॉज ऑफ कंसर्न, क्योंकि एफआईएस का कंटिन्यूस सेलिंग चल रहा है मार्केट में. दे हैव बीन ऑलमोस्ट इन द लास्ट 18 months में, there have been almost about $45 billion of FI selling that have taken place in the secondary market, and वो करेंसी पे उसने काफ़ी प्रेशर डाला है. करेंसी पीक्ड एट 94.82 फॉर टाइम बीइंग. आरबीआई ने काफ़ी मेजर्स इनिशिएट किए, उसके वजह से करेंसी has the rates have cooled off, and right now dollar is at 93 levels, but it remains volatile. और अगर एफ आई एस का सेलिंग कंटिन्यूस रहेगा तो करेंसी को अप्रिशिएट करने में टाइम लगेगा. वन थिंग वन शुड नोट इज कि पिछले 1 साल में करेंसी डेप्रिसिएशन हैज बीन एट ऑलमोस्ट अबाउट 7.5%. अगर आप हिस्टोरिकली देखेंगे तो हर साल डेप्रिसिएशन टिपिकली होता है 3-3.5%. सो वी डेप्रिशिएटेड मीनिंगफुली पिछले 1 साल के अंदर. And if currency remains soft, which जो हो रहा है पिछले 2-3 महीने में, एफआई का सेलिंग is likely to continue. Yield curve काफ़ी हार्ड हो चुका है. This data is again as of 6th of April, where जो GSEC yield था वो 7.13% हो चुका था. अभी yield curve थोड़ा soft हुआ है after it peaked at 7.13, and right now it's at about 6.9%. पर अगर GSEC yield ऊपर जाता है तो definitely आपका weighted average cost of capital बढ़ेगा, and hence your terminal value for equity will come down. So it is beneficial from an equity market perspective कि the yield curve becomes a bit soft and it's flattens out. आरबीआई ने काफ़ी मेजर्स इनिशिएट किए हैं in terms of infusing more liquidity in the system to ensure कि yield curve behave करे अपने आप को, and it remains within this range.
See, I think this is just continuation of what Satish was telling, that valuations, at least on the Nifty, have completely come down to levels that we have not seen any time in the last 5 years, right? In fact, these kind of levels perhaps were seen on the Nifty during demonetization and when GST was introduced, etc. So clearly, I think for this is a great opportunity. Thanks to the war, thanks to the FI exit, markets have indeed, come to a point. I think there was one complaint about equity markets in India, that valuations are very high, and that has been a complaint that was sort of persistent, if we see across last few years. And I think that is getting sort of corrected here. We don't know whether we are at the bottom or not in that sense, but at least at this point we are way below the long term average on the large cap side. Even on the mid cap side, as you can see, where we used to be about 2 years back, where we were 2x the standard deviation of the long term average, now we have come down to the long term average, and that is a good sign. That said, just wanted to sort of also show a couple of data points in terms of the performance of the various segments of the market: large cap, mid cap, and small cap. If you see on a 3-year basis, mid and small have continued to be strong performers versus the Nifty 50, and the broader markets clearly have given more returns. And but the surprising part is, even on a 1 year basis, after the kind of fall that we have seen in the Nifty, now the returns that the Nifty 50 and the small cap 250 have made, it's not too different. And that is after a very vicious fall that the small cap 250 has had in the last 6 months. So point being, I think clearly through this correction, particularly during the war time, as you can see, small caps, mid caps, or large caps, there is no significant difference in the way they have fallen. This clearly tells us that at least on the small cap and the mid cap side, perhaps there is selling exhaustion has happened, particularly on the small cap side. And otherwise, in a typical correction, like say, suppose a correction that we saw last year between say Jan and March, we would have seen very sharp declines in the small cap versus the large cap. I think if I'm not wrong, while the large caps fell about 15% in the previous calendar first quarter, small caps had fallen almost 25%. So there was a 9-10% gap, and this is not there. So this is in a way telling us something. That said, from a sectoral perspective, I think there are a lot of opportunities that have opened up. I will not go in deep here, but the fact is that, relatively, I think the bigger question that people would have in their mind is, when will the FIs come back, and will they come back at all? Deepak did allude to the fact that a currency which is not stable doesn't give a lot of confidence to FIs. But that said, if you see the valuation today, I think FIs will clearly see that India versus other emerging markets is fairly cheap, and India versus rest of the world also is among its cheapest in last say 5-6 years. So the valuation argument is out. Yes, the global euphoria which continues on the basis of AI and AI driven stocks and the whole rare earth etc phenomenon, we are still not participants to that, but at least we are not overpriced anymore. And somebody who wants to play India for the long term, play India's GDP, India's per capita income growth story, India's consumption story for the long term, I think this becomes a very long entry point. This becomes a very good entry point from a valuation perspective. Also, I think when you go granular, sometimes the bigger indices may not tell you the true picture. But so when we look at the sectoral indices also, you know, we see sectors like say financial services, which are now cheaper on a 10-year basis. Again, this data was as on 7th April, by about 22%, on a 10-year basis. So 10 years back versus now, the valuation of that benchmark today is about 22% cheaper on a PE basis. If you see the FMCG, and FMCG is important because it signifies consumption story of the country, but it was a very high PE sector. As you can see on a 5-year basis now, the valuations are down by almost 39%. If you see IT, which is going through its own challenge with the, all the troubles that AI implementation gets globally, it is on a 5-year basis cheaper PE by 30%. So other than a few sectors, particularly linked to metals, energy, and pharma, most of the other sectors are now available at a very deep discount, right? Even yeah, sure.
Yeah, I just want to add over here one point, Asit, that almost about 75 to 80% of the market is trading at a discount on a 5-year basis or 10-year basis. There are only about 3 sectors on a 5-year basis जो प्रीमियम पे ट्रेड कर रहे हैं, एंड अगर आप 10 साल में देखेंगे there are only about 4 sectors जो प्रीमियम में ट्रेड कर रहे हैं. तो मार्केट में अभी काफी अपॉर्चुनिटीज है अक्रॉस सेगमेंट्स, एंड काफी काफी मीनिंगफुल डिस्काउंट चल रहा है गिवन द हिस्टोरिकल मल्टीपल्स. आसिफ, प्लीज कंटिन्यू.
Yeah, true. Thanks, Deepak. ऑल्सो ये जो स्लाइड बताती है वो ये है कि जैसे जैसे ब्याज दर बढ़ते हैं, पी ऑफ द मार्केट रिड्यूसेस. एंड अगर आप देखेंगे ये 20 साल का चार्ट है, एंड दिस इज हेल्ड थ्रू. ठीक है. एंड क्वाइट क्लियरली इन दिस सेशन ऑल्सो, जैसे दीपक जी ने पहले आपको बताया था कि यील्ड्स हार्डन हुए थे, ब्याज दरें बढ़ी थी, एंड आपने देखा कि पी कम हुई है. ठीक है. बट द फैक्ट इज दैट जो 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 यील्ड्स हार्डन हुए हैं वो एक्सपेक्टेशन में ये हुए हैं कि इन्फ्लेशन बहुत जोर से बढ़ेगी, इंडिया क्रूड डिपेंडेंट कंट्री है, तो काफी मतलब इन्फ्लेशनरी इम्पैक्ट रहेगा, जिसको कंट्रोल करने के लिए आरबीआई को रेट्स बढ़ाने पड़ेंगे। बट इट्स परहैप्स बिकॉज ऑफ द इलेक्शन के वजह से होगा, या जो भी है, या फिर एट द ऑल्सो द फैक्ट दैट गवर्नमेंट्स एबिलिटी टू सॉर्ट ऑफ होल्ड ऑन टू प्राइजेस आज तक एट द एंड, ऑल्दो जो इम्पोर्टेड प्रोडक्ट्स हैं उनमें दाम बढ़े हैं, लॉजिस्टिक्स के दाम बढ़े हैं, बट एक्चुअली पेट्रोल पंप पे आज भी पेट्रोल और डीजल के दाम बढ़े नहीं हैं। सो इफ वी फाइंड सम नॉर्मलसी कमिंग in the war situation, then perhaps this yield increase itself will be challenged, and that will give a reason कि मार्केट की पी बढ़ सकती है यहाँ से। Deepak, you want to take this slide on institutional flows?
Sure. So, as ये slide clearly दिखा हुआ है आपको कि FIIs have been continuous sellers in the market पिछले 6-7 महीने से, और actually पिछले 18 महीने से, since October 2024 onwards, FIIs continuously market में बेच रहे हैं, while DIIs have been supporting the market on a continuous basis. अगर मैं आपको एक data point share करना चाहूँगा, since October 24 till March 26, total FII selling has been almost of about $45 billion. एंड उसके सामने डोमेस्टिक मार्केट में DII का बाइंग हुआ है ऑलमोस्ट अबाउट $140 बिलियन। तो जो बाकी का $90 बिलियन है, दैट हैज प्राइमरली ऑन अकाउंट ऑफ IPOs, OFS जो हुए हैं मार्केट में पिछले 18 महीने में, ऑलमोस्ट अबाउट 150 IPOs हुए हैं। सो दैट काइंड ऑफ मनी हैज गॉट सक्ड आउट ऑफ द सेकेंडरी मार्केट, प्लस FIS का कंटिन्यूस सेलिंग which has been substituted by the domestic buying जो हुआ है मार्केट के अंदर।
इसमें what we need to understand, Asit, can you just move to the previous slide, कि जब भी FII वापस आते हैं तो बाजार का रिकवरी जरूर हो जाएगा, क्योंकि अभी देखते जाएगा तो मार्च 25 का साल में 4 लाख कोटी का आउटफ्लो हुआ था, और मार्च 26 में 2.1 लाख करोड़। सो टोटली the entire inflow of domestic in March 25 has been sucked out by FIIs in 2 years. And if this comes down, we have seen कि 2 साल में 2-3 दिन अभी inflows हुआ है, very early to make this prediction, but seeing the valuations and seeing the currency stabilizing, and if the oil prices cool off, then India is the biggest trade to look at. So to be defensive and with valuations on our side, and to be defensive, I think is a mistake. We should advise investors to start investing at least from now on. I think in terms of volatility and peak pain, we are almost done. Unless there is something which, crude goes up even more, which is not in the normal scope of our projections.
Yeah, I think Satish, you could also make the point that India has withstood this storm quite well, right? I mean, among other peers,
Correct.
A lot of other Southeast Asian economies, or other economies in the world, I think we've done quite well. शायद हमारे listeners को पता नहीं होगा, but the reality is that यहाँ पे in our country पेट्रोल डीजल के दाम बढ़े नहीं है, बट जस्ट इन अ नेबरिंग कंट्री पेट्रोल प्राइसेस आर अप बाय मोर देन 50%. There are other countries where there is no power available or no fuel available, and people are facing lockdowns. So, point being that there are several countries where there is sort of an irreparable hit that has happened in the short term, which will take a lot of time, and it will set these economies back by few significantly. Whereas in that sense, we are very lucky to have a lot of stability, right? And that is the point that Satish is making, that when FIs see this, and at the end of this current crisis, they will clearly see the kind of strength Indian economy has sort of worked with. कि इस देश में जिस तरह की स्टेबिलिटी दिखाई है, वो FIs देखेंगे, because that will be the platform on which the GDP growth will increase further from there. Right, Satish, you want to add anything here?
Yeah, that's all.
Yeah, sure.
ये अगर आप सेक्टर्स परफॉर्मेंस भी देखेंगे, रेट सेंसिटिव सेक्टर्स ऑन अ 1 ईयर बेसिस ने काफ़ी अच्छा परफॉर्म किया है कंपेयर टू द मार्केट इन ऑन एन ओवरऑल बेसिस. अलोंग विद दैट सेक्टर्स, मेटल्स, ऑटो, दीज ऑल रेट सेंसिटिव सेक्टर्स. फार्मास्यूटिकल सेक्टर ने अच्छा परफॉर्म किया है लार्जली ऑन अकाउंट ऑफ करेंसी डेप्रिसिएशन, जो उनको टेलविंड देता है. while जो sectors जिन्होंने खराब perform किया है, which has been basically IT sector, which has got hit by the anti-AI wave, and consumption sector, जहाँ पर consumers के choices काफ़ी change हो चुके हैं. Monthly basis पे obviously March महीने में all sectors have underperformed meaningfully across the space, but pharma जहाँ पर भी offshore market है such as pharma, IT, they have outperformed the rate sensitive sectors.
करेक्ट. आई थिंक मैं यहाँ याद दिलाना चाहूँगा कि पिछले कॉल में भी हमने कहा था कि वी आर हैविंग अ वेरी balanced portfolios where we are trying to be we are trying to have allocation to all sectors and run it in a very disciplined manner. As you can see, अगर आप देख सकते हैं यहाँ पे IT sector has fallen only 5%, whereas the Nifty itself has fallen by 11.3%. So this approach of being keeping, like, see, at the peak of bearishness in IT, where clearly it was looking like AI is going to finish these businesses, this sector has outperformed other sectors which were looking very, very strong, say like auto. Auto, the people were so bullish. So my point is, the discipline that we have got into sector allocation in the time of crisis is sort of working out from a sectoral allocation perspective.
या सो ये डेटा पॉइंट काफ़ी इंटरेस्टिंग है कि अगर आप देखेंगे पिछले 16 साल के अंदर जो हमारा प्रीमियम होता था वर्सेस टू एमएससीआई इमर्जिंग मार्केट, वो सबसे कम है एट 27%. सो इंडिया का वैल्यूएशन काफ़ी डीवेट हो गया कंपेयर टू एमर्जिंग मार्केट्स. इंडिया हमेशा प्रीमियम पे ट्रेड करता था एक्सेप्ट इन मार्च 2006 एंड मार्च 2009-10, जहाँ पर हम ट्रेडिंग एट अ डिस्काउंट टू एमर्जिंग मार्केट्स. बट पिछले 16 साल में वी आर ट्रेडिंग अमंग्स द लोएस्ट प्रीमियम वर्सेस द एमर्जिंग मार्केट्स. एंड दिस इज अगेन जो जैसा आसित जी ने कहा ऑन वैल्यूएशंस, अगर आप देखेंगे चाहे वो आप निफ्टी 50 ले लीजिए, मिड कैप ले लीजिए, स्मॉल कैप ले लीजिए, वैल्यूएशंस काफ़ी कम हो गई है. निफ्टी 50 की बात करेंगे तो निफ्टी 50 इज ट्रेडिंग एट अबाउट 17.5 18 टाइम्स, जबकि एवरेज मल्टीपल वो होता था 20-21 टाइम्स. मिड कैप की अगर आप देखेंगे, मिड कैप का एवरेज मल्टीपल होता था 23.5 to 24 टाइम्स एंड इज करेंटली ट्रेडिंग एट 24.6. वाइल अगर आप स्मॉल कैप का देखेंगे तो एवरेज मल्टीपल होता था 17.5 एंड वी आर करंटली ट्रेडिंग एट अबाउट 20 टाइम्स.
आई थिंक दिस इज वेरी पावरफुल स्लाइड जो ये दिखाता है कि निफ्टी पिछले 11 सालों में कभी भी इतना चीप नहीं था. आई थिंक दैट इज वेरी क्लियर. वन इज एवरेज, यस, बट इन द एब्सोल्यूट वैल्यूएशन इतना सस्ता कभी भी नहीं था. सेकेंड, आई थिंक इफ वी सी पिछले 5-6 सालों में, आई थिंक वी आर अमंग, इफ यू लीव FY23, मिड कैप इंडेक्स इज एट इट चीपेस्ट लेवल, right? And fundamentals are not deteriorated. Fundamentals continue to be very strong. Small cap optically looks, a little more expensive. थोड़ा महंगा दिखता है as compared. So, from our perspective, small caps continues to remain not an allocation theme, but more of a stock picking theme, because there are a lot of opportunities, and there is a lot of opportunity to pick leaders within the small cap segment, and that is how we are focusing on that. Satish, unless you want to add something here, we can probably stop.
I think what I just want to add is that just reiterate, और अगर FII का इंटरेस्ट वापस आते हैं तो लार्ज कैप्स डेफिनेटली लुक इंटरेस्टिंग, and then we can look at diversified sectors to grow. We are positive on the manufacturing sector, and definitely we think India will become a manufacturing hub for engineering goods, especially for engineering goods. We are seeing a lot of MNC companies investing in India, either in the listed space or unlisted space. So I think we should be positive from here on. We can't say what will happen to the oil and oil prices in the short term, but longer term, I think things should stabilize. The second point we have to highlight here is that the recent wars, Ukraine, Russia, Iran, US, and the COVID crisis has exposed India's energy, what do you say,
Dependence.
dependence on outside world. India has to increase domestic production of energy, and therefore we think that power utilities, power equipment manufacturers, and many of these core manufacturing sector will pick up and revive. India has to focus on creating domestic energy security, whether it be through nuclear or through solar or through thermal power. And we think that in the next few years, we will see a higher consumption of electricity rather than hydrocarbons. So this is something which we think will be a bigger outcome of this war, and we are watching this very closely.
Thank you so much, Satish sir, Asit sir, and Deepak sir, for giving us such wonderful insights on the markets. Thank you, participants, for joining us for today's call.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.